Okay, everybody, we got a Zacks professional services video today. Um, I'm going to get through some talks and hopefully enjoy this whole discussion. So, what we're talking about today is Asia. And first of all, these are the views of me, John Blank, not necessarily the views of the company Zacks Investment Research. Past performance is no guarantee of future results. All right, so we're ending 2023 with a macro review of Asia. Part one, we've got a macro charts for mainland China. Part two, we've got macro charts for India, Japan, South Korea, and Indonesia. Part three, we've got comparing macro indicators across Asia. So here we go. Macro charts for mainland China. All right, first thing I want to point out is that international trade in China, the middle part, is doing quite well. And property prices are coming down. So keep that in mind. There's a lot of talk out there about what China is falling apart, and it doesn't seem on our first impression that there is anything but an export boom in China, and property prices are actually falling. Have they done it before? Yes. Have they crashed? Never. Not on this chart. They do go down sometimes for years. So it doesn't actually strike me as anything but a long run up, and now they're going to probably go down or sideways for a while. All right, imports are in the United States have not reached a new high. The yuan is the real story here. 7.2 was now the story, but 6.2 before COVID. So they did, like everybody in Asia, depreciate the currencies. And that's wrote about, the total factor productivity and their exports. So great decision to do that, going back to the well like they always do in this part of the world. All right, the balance of payments is basically flat, and their national account GDP is basically strong, and their labor force is basically fully employed at 4%. China doesn't have any unemployment problems. That's how they get the communist system to work. They don't want unemployment. They will manage it to make sure nobody is unemployed. They don't want strikes. They don't want strife. They don't want conflict. All right, net lending and borrowing. Basic point here, as you can see, for 20 years, there's been no movement in interest rates. Whatever you think about China, they don't do anything with interest rates. It doesn't really happen that way. And you can see the fiscal situation and the reserves are kind of similar. The last, 15 years have been extremely strong. They had $3 trillion in reserves. China, a great story of a strong country. Let's hope they get the zero COVID policies out of the way, Omicron out of the way, and get moving. All right, for charts for India, Japan, South Korea, and Indonesia. Let's take a look. All right, so we've got consumer prices in India pretty much moving along trend. Interest rates go between 6 and 8.5%. They're about 7.5, 8% now. Not as high as they've been recently, and probably going higher. And you can see the GDP is now at all-time new highs. So India has recovered and is doing strong. A lot of what's going on here, again, in inflation about 5%, doesn't much move the dial on that country. New all-time high in GDP. You can see that spike there on the top chart, and residential property prices coming down over the last 3 years. So China, India, both and kind of showing a similar pattern actually. India 3. Again, you're seeing strong GDP growth. You're seeing an unemployment population ratio that's probably COVID related and a lot of other things related to India specifically. You can see the decline like everybody in the 2020 period, but it was coming down earlier. I'm not sure what that means in the Indian context. Indian rupees depreciation, right? Like everywhere in Asia, there's depreciating currency out of the COVID pandemic that's driving exports in India. Japan not recovered all the way, as you can see the job GDP part, but doesn't matter because like everybody leaving the labor force, Japan's no different. They're down to 2% on the unemployment rate. The yen 150 to 140. Extraordinary depreciation in Japan, but again, consistent with India and China. All this happened is the Fed is racking up these rates, sucking money in and depreciating these currencies, but that is driving their export performance, people. All right, so here we go again. Macro GDP has not recovered. Inflation is non-existent. This is a zero growth economy, and residential property prices have been declining or flat for 30 years. This country doesn't do anything from a macroeconomic perspective. All right, long-term rates at zero. Total assets QE obviously started in 2014 like everybody else and has stayed on for 8 years. Crazy amount of emergency status. Doing their best to keep in touch with the Fed. That's all they're doing is chasing the Fed. And you can see the CPI has done absolutely nothing for 20 years. There's been absolutely nothing but zero inflation for 20 years in Japan. Crazy. South Korea, consumer prices, well-managed country. Unemployment has come down strongly from 4 to 2. Again, this is the Korean won version of depreciation and export-driven businesses for the Korean area. And long-term interest rates are rising from about 2 to 3%. Not dramatic in this chart at all. All right, so then we get to residential property prices. Yes, they are going up in Korea. The won actually did the same thing that the Japanese yen did. It sparked higher, very depreciated situation. And that has kept the GDP growth at all-time highs. That's the chart at the bottom there. GDP growth is doing quite well in South Korea. Indonesia, let's look at the middle one. Manufacturing has not come back all the way yet from the COVID pandemic, and that's really all we can learn from this chart. Let's get to the next one. What I notice here is that there is no residential property price bubble in Indonesia. Again, not like Canada or the United States. Inflation has actually come down quite dramatically in this country, and you're seeing a new high in GDP. So obviously, Indonesia is doing just fine. On to comparing the macro indicators across Asia. First off, let's get to the consumer confidence. Net balance charts for China, India, Japan, South Korea, and Indonesia, all really good. China, India, really strong. South Korea's come back strongly from the COVID pandemic, as Indonesia, not quite as strong. And Japan we can exclude because they simply are morose all the time. Doesn't matter much. But basic point here is that it's not like China has been really suffering in the consumer confidence area. Surprisingly, India obviously has come back quite well as South Korea. All right, household debt. Main thing I want to point out here is India, Japan, and South Korea have gotten more into household debt through the pandemic. Obviously, a lot of stress put on these countries, and they did drive some of the growth by also raising household debt. So it was partly depreciation of currencies, partly the rise in household debt. Just keep that in mind. All right, tax revenues are a backdoor way to understand whether these economies are doing well or not. More tax revenues, stronger economy. Less tax revenues, weaker economy. Obviously, China, weak tax revenues. So what they're telling you is one thing. Tax revenues are telling you another thing. They have had suffering from the tax revenue perspective for 3 years. Japan did nothing, as of course, and South Korea has actually kept their tax revenues pretty much down. Interesting thing here. I think the only thing that we can really learn is from China. Industrial production. Main point here is the differences between the COVID experiences. 60% decline in India, 25% decline in Japan, only a 5 or 10% decline in South Korea, and a 30% decline in Indonesia. Whereas in China, you actually just went to zero. So best in class, given that China always games their numbers, I would say South Korea because they did such a good job with their COVID pandemic. Main point here is everybody's basically come back on trend after a big spike. So there is some cooling going on in this part of the world. Keep that in mind. You are seeing cooling in industrial production. Non-performing loans, a lot of worry over here. Main point I want to make because China and India are actually 3 or 4 years off their big peaks. Do we trust the data? Again, it's always a question. But if you do trust the data, they're actually beyond their peaks, not ahead of them. And in South Korea and Japan look great. Indonesia, not so good. Deposit charts. Main point here I want to make, everybody's around 10% on there in deposit charts. That's China, that's India, that's South Korea, that's Indonesia. That's basically what I see here. And that's really not much to learn from. Electricity generation is better. This is obviously a GDP growth proxy. More electricity you need and generate and produce, the more strong the economy. China, of course, central plan, moving up on this plan. India doing quite well. Japan doing nothing, and South Korea doing well. And Indonesia actually at a new all-time high. So I would again say everything but Japan is doing great. So thanks for attending. This is John Blank, PhD, Chief Equity Strategist of Economist at Zacks Professional Services. And this is where you can get a hold of all this material. 866-794-6065. Strategy Pro, call at zackspro.com, www.zackspro.com. Zacks Professional Services, and at Zacks Advisor Tools. So I hope you enjoyed this, and that's it for me.